Today, we're going to hear from our three experienced SME panellists on their views on the lessons of lockdown within regulation and risk. They will give their opinion on priorities, strategies and change as we move out of the pandemic and how shifting forces will impact the risk and reg landscape.
So to begin with, I guess I would start with saying, kind of having a defined framework helps. There's kind of to make sure there's a base of all the various elements that are covered, and make sure that we can both assure and ensure that operational risks are identified and hence known, and then in turn, they can be managed and mitigated to within acceptable levels.
Recently as last month and before the easing of lockdown, Megan Butler made it very clear what the FCA's key focuses still remain, and they are operational resilience, which we will touch on today, a firm's financial resilience, but also a firm acting with integrity. So they are still the three key things that the FCA are focused on.
A further building block, which in my experience is particularly important, is around clarity. Being clear as to which operational risks are overseen by which part of the business and which relevant governance committee or subcommittee is essential.
Firms will be required to look at important business services that it provides to customers, and building their operational resilience around those important business services.
So the regulators are talking more about financial crime independence, and in the spirit of doing more with less, which is the world we're in now, for me there is a great opportunity to spend some time, when we can get to it, to look to how better we can align different components of financial crime. So the first thing that when we got into lockdown that people talked to me about that were causing them concerns was governance. And really there were three issues to that. Number one, it was hard to deliver governance at a distance. Number two, it was hard to deliver governance with the speed that management needed it to deliver. More meetings, more focus, just more governance because of the situation. And thirdly, it was hard for people to deliver the rigor. Way for us to go as an industry in terms of getting trade surveillance right. Whether that's actually pure surveillance itself, whether it's handling false positives coming out of surveillance, or whether it's linking surveillance with other parts of the end-to-end trading process. One of the challenges I see in industries around the role of supervisors in first line of defense. I think supervisors right now are particularly challenged around actually doing their line management responsibilities, their QA responsibilities, and their educational responsibilities.
How are senior managers comfortable, not only that their employees are doing the right thing, but that their employees know exactly what the right thing is and what is expected of them?
Core data, and I'm talking about non-financial data. So for me, data is pretty much fundamental. And if I was working in a bank right now, and not as a consultant, I would spend a lot of time focusing on the information that I'm providing to management.
We know that the pandemic has probably been the worst and most prolonged operational disruption that we've experienced since probably World War II. But what have we learned from that, and what is it that the FCA expect from us going forward? The FCA is firmly on the road of outcomes-based approach. So they're really focusing on the perspective of the end users of financial services.
Organisations which encourage and value colleagues to take an end-to-end perspective can make a real difference. That curiosity about kind of looking at things from an end-to-end perspective, engaging colleagues both upstream and downstream, can make a real difference in both avoiding issues that may arise, and equally addressing them quickly and effectively.
If you are involved in product management, I think using, back to where I started with non-financial data, using data to understand product performance so that reviews of products can be done on a more event-driven and data-driven basis rather than purely on formulaic annual or biannual basis, I think is going to be particularly important, because I think we'll see a different behaviour in products going forward over the next couple of years.
The concluding point there really is about, kind of one of those guiding principles about people over process. It's a balance of having a framework that works. It's about making sure that kind of, we're encouraging our people to work in a proactive, engaged and curious manner. And that, again, can lead to, providing a greater level of operational resilience.
A lot of fintechs are quite small and quite growing. So I think the biggest challenge for them will be to make sure that they can front run their growth with effective controls.
Increased scrutiny. Private equity particularly has been a bit of a closed shop for many, many years. They are now acting in much more of a mainstream world where the regulatory expectations on them are becoming much more transparent and requiring them to be transparent.
I'd like to say a big thank you to our panelists for giving up their time to be part of this event. We found their insights really useful, and we'd also like to say a special thank you to all of you for joining us. At Danos, we're always striving for the best, whether that be from a customer service or a shortlist perspective, and we're very grateful for the loyalty that clients we partner with have shown during this time and over the years.